But then there's the really big super trend, and that's technology. Basically, everything that gets digitized goes to zero in value. I mean, everything. So cloud computing, computing power, computing chips. I mean, you name it, televisions, mobile phones, everything goes to zero. So it's an incredibly deflationary force. And that's only about to accelerate because we've now got green energy, which is getting cheaper and cheaper and cheaper and cheaper, and that's going to accelerate. We've got artificial intelligence, which is replacing humans, robotics replacing humans, biotech sciences, we've got Internet of Things, we've got so many, we've got space, we've got so many massive technologies all going exponential in their adoption all at the same time. That's a very, very, very deflationary force.
Bitcoin has pumped nearly 5%, while Ethereum pumped nearly 10% over the past 24 hours. This resulted in shorts worth $800 million being liquidated. The overall crypto market cap pumped by nearly 5%. This has resulted in a short squeeze worth over $800 million according to data from CoinGlass. Hello and welcome to Money Talks. In today's video, Real Vision CEO Raoul talks about the mass adoption and future prospects of crypto and blockchain industry. Raoul also highlights the inflation versus deflation scenario and why everyone should start investing in cryptocurrencies before it's too late.
It's back to party time, but because we're still swinging that pendulum after the pandemic, we'll probably have a rebound as the economy recovers and inflation it's not going to entirely disappear. So rates might rise again, but then we really see the bad side of this whole demographic technology thing. So, I'm very bullish on risk assets over the next 10, 15 years. I think it'll be very positive soon. Then it'll get a little bit, again, volatile. And unless something changes geopolitically, I think we're probably setting up for a new Renaissance golden age because of what's happening with technology.
Chances for the famous Uptober meme to live up to its promise are suddenly alive again as crypto markets rebounded in the past 24 hours, with Bitcoin and Ethereum, the industry's two largest digital assets, leading the resurgence. October has historically been positive for the leading cryptocurrency, with monthly gains recorded 10 times out of the last 13 years, according to Bitcoin Monthly Return. Last year's October rally, for example, set a strong ground for Bitcoin to reach its highest ever value above $69,000 in early November.
So I think deflation is the more likely outcome. And to give you a historical comparison, we've only really shut down the world a few times in the past. The last one was obviously World War II. So World War II, the whole world was shut. Everybody was out of the labor force and in the state sector or in military or working on bombs and planes and that stuff. So what happens after World War II, 1946, everybody comes into the labor force looking for a job. Everybody wants to spend some money because they've been out in the military. Nobody's in the factories yet. So we get this massive supply demand issue, which is very similar to post-pandemic. And what happens is CPI in the United States goes up to 20%. The Federal Reserve raised interest. Well, it wasn't the Federal Reserve raised rates. And then what happens is we went straight to deflation 18 months later. Then we have a rebound and then we settle in this period of interest rates were about 3%. Inflation was about 3% and interest rates were about 2%. And we did that for 20 years, a massive fiscal stimulus.
The leading cryptocurrency, however, surged 5% on Tuesday to reclaim the $20,000 mark for the first time since the beginning of October, with the rally continuing overnight to a current price of $20,659, or 7.2% over the day per CoinGecko. Ethereum's price movement is even more impressive as the second largest cryptocurrency spiked as much as 14% over the span, trading around $1,536.
The first part is the adoption of technology is relentless. It does not stop. It's not driven by the capital markets. The capital markets mean more entrepreneurs take a shot. Nobody gives a shit if the hurdle rate's 6%. Look at the hurdle rate in India. Look where Indian interest rates are. Where are they today? 7.5%. So 7.5% rates. And how many entrepreneurs have you got? The entrepreneurs in India are going exponential. So it's a nonsense narrative that raising interest rates means that nobody does technology. Go back to the 70s. There was plenty of technology companies like Xerox that took over that period of time. So I don't believe that. I think the adoption of technology is exponential. Again, if people want to understand what I'm talking about, look at India. Look at what happened after Aadhaar, India Stack, UPI, and then the Cambrian explosion that happened there. It's astonishing.
Notably, the latest price action resulted in a whopping $1.13 billion liquidated across the markets over the last 24 hours, with more than 87% of that amount, or $979 million, being short positions or bets against price rise, according to data from CoinGlass.
And you got 1.2 billion people into it in 2 years. This has never been done before. That's the speed of technological adoption. So let's go to crypto. Crypto right now is the fastest adoption of any technology the world has ever seen. It's twice the adoption speed of the internet.
Sorry, do you mean by number of holders?
Increase in number of holders per year is faster than users of the internet in terms of growth from the first 5 million users. That's where I took it from. So crypto's still growing. This year will be a much flatter year, but it was growing at an average at about 160% a year, and the internet was growing about 80% a year. It's twice the speed. So we have never seen a technological adoption as fast as this. And so does interest rates stop that? No. Change in interest rates is the thing that stops it. That liquidity, remember, it's year-on-year rate of change. If they just stopped interest rates, if the US stopped interest rates here, over a while, the rate of change goes flat. Assets can do fine in that because remember, it's technology adoption that actually drives the price over the longer run. So it's the rate of change that's causing it. If the rate of change goes to zero and it flattens out, i.e. interest rates stay sticky, then the chances are that we just get the trend rate of adoption of the technology over time, which still gives it 100% a year rise.
In crypto markets, liquidation refers to an event when an exchange forcefully closes positions due to a partial or total loss of the initial margin. This happens as a result of a trader not being able to fulfill the margin requirements for a leveraged position, which means they don't have sufficient funds to keep the trade open.
Your game is to buy it ahead of all the 28-year-olds when they get to 32, 34, and they want to buy a house. Right? India's very different.
Okay.
Right? You've got to go back and look what happened in the United States in the 1970s. That's where India is. And what happened was you actually got quite a lot of inflation because everybody left home, got a job at the same time, bought a house, bought a car, bought their first suit, bought their first table, chairs, everything, right? That purchasing power is enormous. All of the young Indian population are going to go through this, and you might get significant inflation for a period of time. It depends whether you can offset it with technology and other stuff. It's structurally a different economy than the US was in the 70s. But yeah, my advice is Indian property is expensive. It's going to get more expensive because all of you need to buy a house.
Oh my God.
So, what are your thoughts about Raoul Pal's big bet on cryptocurrencies? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.